Buckle up, the car market is stalling out. The car market is showing signs of trouble, sales are slowing down. Prices, once sky high, are starting to dip. Some experts predict a massive drop in car values, as much as 88%. This potential collapse has sent shockwaves through the industry and beyond. The reasons for this downturn are complex and interconnected. A perfect storm of economic uncertainty, technological disruption, and changing consumer preferences is brewing. This isn't just a blip on the radar, it's a fundamental shift in how we view and use personal vehicles. For decades, car ownership has been a cornerstone of the American dream. But that dream is starting to feel out of reach for many, and for some, it's not even a dream anymore. The open road is calling. But fewer people seem eager to answer. This isn't just bad news for car manufacturers, it has ripple effects throughout the economy. From steel production to advertising, countless industries rely on a healthy car market. The coming months and years will be crucial for navigating this turbulent terrain. Economic headwinds. Recession fears loom large. The global economy is facing strong headwinds. Inflation is soaring, interest rates are rising, and consumer confidence is shaky. This economic uncertainty is casting a long shadow over the car market. People are hesitant to make big purchases when the future feels uncertain. Cars, especially new ones, are significant investments. With job security on shaky ground and the cost of living rising, many consumers are hitting the brakes on car purchases. The used car market, which saw record prices during the pandemic, is also feeling the pinch. As demand cools and supply chains normalize, used car values are starting to decline. This trend is expected to accelerate in the coming months. Add to this the rising cost of borrowing, and it's clear that the economic climate is putting a damper on car sales. Financing a new or used vehicle is becoming increasingly expensive, further deterring potential buyers. Supply chain whiplash, from shortages to glut. Remember the chip shortage? The global pandemic wreaked havoc on supply chains, and the car industry was hit particularly hard. Semiconductor chips, essential components in modern vehicles, were in short supply, driving up prices and leading to long wait times for new cars. But the situation is shifting. Chip production is ramping up, and the backlog of orders is starting to clear. This means that new cars are becoming more readily available, easing supply constraints. However, this increased availability coincides with waning demand. The result? A potential oversupply of vehicles. Car manufacturers, once struggling to meet demand, may soon find themselves with overflowing lots and dwindling profits. This shift from shortage to surplus is a stark illustration of the volatility of the current market. The same forces that drove prices up are now poised to send them tumbling down. The electric revolution. Gas guzzlers, beware. The automotive industry is undergoing a seismic shift. The rise of electric vehicles, or EVs. Tesla, once a niche player, has become a household name, and traditional automakers are scrambling to catch up. EVs are no longer a novelty, they're becoming mainstream. Governments worldwide are incentivizing their adoption, and battery technology is rapidly improving, addressing concerns about range and charging infrastructure. This transition to electric mobility poses a significant threat to traditional car manufacturers that have been slow to adapt. Gas-guzzling SUVs and sedans, once symbols of status and freedom, are starting to look outdated and unsustainable. As EV adoption accelerates, the value of gasoline-powered vehicles is expected to plummet. Why buy a depreciating asset that guzzles expensive fuel when you can opt for a sleek, efficient, and increasingly affordable electric alternative? Section 5. The rise of ride-sharing. Why own when you can share? The rise of ride-sharing services like Uber and Lyft has fundamentally changed how we think about transportation, especially in urban areas. Why own a car with all its associated costs and hassles when you can simply summon a ride with a few taps on your smartphone? Ride-sharing offers convenience, affordability, at least for now, and flexibility. It eliminates the need for parking, maintenance, and insurance, appealing to a generation that values experiences over possessions. This shift away from car ownership is particularly pronounced among younger generations. Millennials and Gen Z, accustomed to on-demand services, are less likely to view car ownership as a rite of passage. The implications for the car market are significant. As more people opt for ride-sharing, the demand for personal vehicles, both new and used, is likely to decline, further contributing to the predicted price drop. Section 6. Used car carnage depreciation disaster looms. The used car market, which experienced unprecedented price surges during the pandemic, is now bracing for impact. The factors that drove those prices up, supply chain disruptions, increased demand and stimulus checks, are reversing. As new car availability improves and demand softens, the pressure on used car prices is mounting. This is bad news for anyone who bought a used car at inflated prices in recent years, as they now face the prospect of significant depreciation. Experts predict that used car values could fall by as much as 40% over the next year. This depreciation disaster could leave millions of car owners underwater on their loans, owing more than their vehicles are worth. The used car market is notoriously cyclical, but this downturn has the potential to be particularly severe. The confluence of economic uncertainty, technological disruption, and changing consumer behavior is creating a perfect storm for depreciation. Section 7. The Millennial Factor car ownership loses its luster. Millennials, the generation that came of age after the turn of the millennium, are often blamed for killing various industries and trends. Diamond rings, napkins, and even cereal have fallen victim to their supposed lack of interest. Now, it seems, the car industry might be next. Millennials have a different relationship with car ownership than previous generations. Raised during a time of economic uncertainty and technological advancement, they're less likely to view cars as status symbols or essential markers of adulthood. They're more likely to live in urban areas with access to public transportation and ride-sharing services, further reducing their reliance on personal vehicles. They're also more environmentally conscious and may be drawn to the sustainability of electric vehicles or alternative modes of transportation. This shift in attitudes towards car ownership among millennials, a generation with significant purchasing power, has profound implications for the future of the car market. As millennials age and their preferences solidify, the demand for traditional vehicles is likely to continue declining. Data deep dive charts and graphs tell the tale. The car market is heading for a correction. New car sales are plummeting. After record highs in 2021, sales are declining. Used car prices are falling. EV sales are surging. Ride-sharing usage is on the rise. The car market is transforming. Section 9. Buckle up, Part 2. The 88% plunge explained. Now about that 88% price drop prediction. It sounds dramatic, almost apocalyptic. While it's crucial to approach such bold claims with skepticism, it's worth examining the reasoning behind this figure. This prediction comes from a confluence of factors creating a perfect storm for car depreciation. Economic recession, oversupply of vehicles, EV revolution, and changing consumer behavior. While an 88% drop might seem extreme, it's not entirely outside the realm of possibility. Section 10. Navigating the road ahead. Recovery strategies for automakers. The car industry is at a crossroads. Automakers need to adapt, innovate, and embrace the future of mobility. Go all in on EVs. The electric revolution is here. Invest in battery technology and charging infrastructure. Embrace alternative ownership models like subscriptions and leasing. Focus on software and technology. Prioritize sustainability to appeal to eco-conscious consumers. The road ahead is challenging but full of opportunities. Section 11. The future of mobility, a new era dawns. The car as we know it is changing. The internal combustion engine, once a symbol of progress and freedom, is giving way to electric motors and batteries. Car ownership, once a cornerstone of adulthood, is becoming less appealing to younger generations. The future of mobility will be defined by diversity, sustainability, and technological innovation. Electric vehicles, autonomous driving, ride-sharing services, and other emerging technologies will reshape how we move from point A to point B. This transition won't be without its challenges. Job displacement, infrastructure investments, and ethical considerations will need to be addressed. But it also presents an opportunity to create a more sustainable, efficient, and accessible transportation system for everyone. The open road might look different in the years to come, but the journey continues. Buckle up. The future of mobility is just around the bend.
Hello guys, welcome to digitalpauses.com. This is my official website for all your online purchase and all your online shopping. So Digital Pause is a drop shipping website and affiliate marketing. I work with most of the big company, Amazon, eBay, AliExpress, and then you can get most of the product that you want online, books, wellness coach, learn and go, and also you can get things that is related to personal growth, cryptocurrency. These are things that you can buy directly from my website. So, guys, I'm kindly asking you guys to give it a shot. Come to my website. You can get all the stuff that you want from all the big store, from all the big online store like Amazon, for example. You can just click on Amazon. It's gonna take you directly to Amazon website, and then you can just log in into your personal account, and then you can do shopping. The same thing, you can also go to eBay if you like to purchase it on eBay. The only thing you have to do, you have to log in into your eBay account from my website. Everything is transparent. So, guys, you don't have to be scared. The same thing, you can come to AliExpress. AliExpress is a Chinese online website that they have a reasonable product you can purchase from AliExpress. Just type the name of the product that you want on the search bar and you can get it. The same apply to Amazon, eBay, and other big store. So guys, whenever you purchase through my website, I'm going to get a commission. However, that's not going to increase the actual cost of the product that you're going to buy from those websites, eBay, Amazon, AliExpress. So guys, welcome to digitalpauses.com. You can type on Google just digitalpauses.com and then the website is gonna pop up. So guys, please you can visit my website for your online shopping. Thank you. Thank you.
What's up? What's up, guys? What's up? What's up? So, welcome to RokonTV. Here we talk about social issue affecting society as a whole. Please, guys, I'm kindly asking for you guys to like, share, and comment. And also, I'm asking you guys to subscribe to my YouTube channel. And you can also follow me on TikTok, Facebook, and Instagram. Thank you, guys. Bye.